Larry, welcome, and thanks for giving us part of your Friday morning. We were just talking or taking a look at the dollar, holding right around that $92 level, but it's been taking it on the chin this month, to say the least, coming off from highs up around 94.33, and, well, no rejection of these lower levels as of yet right now. One could argue still acceptance of them.
Yeah, and I think that's going to continue to happen in the short term. Think about the FOMC minutes that came out on Wednesday. Not necessarily dollar friendly when you have the Fed saying careful consideration for appropriate bond buying. The circumstances could shift at any time, and many saw the need to enhance the buying. So all that to say, we continue to see a convergence of real rates between, especially the G10 currencies and the dollar, and it just puts the dollar in the rut. But we need to keep in mind that since March, since that huge demand for dollars back in March, G10 average currency has rallied about 15% against the dollar. And honestly, as I've said to you before, I don't see that repeating in 2021. I just think a lot of it has to do with how the Fed tweaks its dual mandate. And it's unclear to me that they can do what they did back in March again in 2021.
Larry, I wanted to get your thoughts on what's been playing out in the Japanese yen recently. We've been watching a pretty steady move higher, but it's really yet to open up the door to the upside. One could argue that this sign of strength that we're seeing amidst the strength here in the indices right now, a sign of some of what we've been talking about throughout the show this morning. Strength in the Asia-Pacific region, for one, some of the economic data that we've been seeing for two. We took a look at some of the numbers this morning. But, Larry, also one could argue not only it's the fact that the yen's been kind of strong, the euro currency has been kind of strong, but inflationary pressures have been very limited. We even saw that in the overnight session. We had some economic data that I wanted to bring to your attention and just kind of point out that inflationary measures still remain extremely muted. Can you talk to us about what you've been seeing as far as that component?
Yeah, and I'm an outlier with regards to inflation, but I think we might see, fits and starts on a short-term basis. But I think that the structural changes in our economy, in the world economy, not just here in the U.S., are so significant, and I just don't think we're seeing it correctly. And all that to say, it's always a new normal, and I do believe it's going to take a lot for inflation to run hot, perhaps in some emerging markets, but in the major economies for it to run hot with the changes that have gone on, the demographic changes and consumption patterns. It's going to be a tall order to fill. So I think we're going to be lower for longer, and that's going to affect like what we're seeing today. We have 10-year treasuries trading around 85, record high equity valuations, gold's down. Or unchanged, I should say, but all that mixed together, I think we're going to see more of that, and it's going to be just more perplexing to investors. Like, how in the world should I get in the stock market with valuations so high and inflation so low?
Yeah, this is a little bit of a different testing times or different metrics, to say the least. Bank of Japan core CPI coming in down 0.7%. The prior reading revised to down 0.5%. We've been seeing muted inflation for the most part across the board here. Let's talk about consumer sentiment. Let's talk about some of the numbers that we saw overnight. We had some EU data, the Business and Climate Survey, business climate data, consumer confidence. It slipped a bit, down 17.6%. Now, while consumer confidence in line with what was expected, again, here you can see even the services sentiment slipping and industrial sentiment slipping. I guess my concern here is that is this, Larry, a reflection of what we've been hearing about, increased coronavirus numbers, a second or third wave, depending on what you want to call it? And, well, even we were talking a minute ago with George Milling Stanley about how some of the news related to vaccine results, while very positive, has been dialed back over the last week or last few days. I mean, that's got to be a bit of a concern as well, and going to minimize or bring down some of these sentiment numbers, correct?
Yeah, I think it has, and it will. We have to look at the trend, though, and over the last 3 or 4 months, those numbers have come in line or even exceeded expectations, whether it be the manufacturing numbers or the sentiment numbers in Europe. I saw that just middle of last week, where all numbers exceeded expectations except for France. But it's like we all know that one data point doesn't make a trend, and the trend has been going in the right direction. And I think we're going to continue to see that, perhaps 3 steps forward, 2 steps back type of thing, just enough to keep us nervous and keep us worried about whether we should be diversifying into Europe, whether sentiment truly is coming back. And we all know that next Friday's BLS number is hugely important with regards to that, because it's going to speak a lot to the service sector here. And is that going to translate into carrying the economy right now?
Yeah, it's interesting because everybody was looking to Europe to kind of give us that precursor, a little bit of an insight in terms of what we could expect to see here. And it does seem like there has been a little bit of an ebb and flow. And so I like what you say again in terms of one data point does not a trend make. And then also in terms of 3 steps forward, 2 steps back, I like to think of as 2 forward, 1 back. That 1 back is difficult to deal with, but the 2 forward are encouraging. And again, what has the indices in theory to these all-time highs, you would think. We talked a little bit about inflation, the impact that has on, well, the fundamentals in terms of that being one of the focal points. But let's talk a little bit about what's been playing out recently, because it's not just the yen and the euro currency that's been strengthening recently. The British pound has been strengthening as well, related to expectations, again, continued expectations that we're not going to see this off-cliff type of Brexit, EU departure. Can you talk to us, Larry, about what the latest that you've been hearing there as we head into the end of the year? I'd imagine potential for this to become a major focal point again, and potential to bring about some volatility into not only the British pound, but ultimately the US dollar as well.
Yeah, it definitely could, but I think people are just growing weary of it. And I think consensus is that the pound, when you look at real rates compared to other currencies, is still a little bit undervalued. It's undervalued for a reason, because it's not an outlier to say yes or no to what's going to happen here in Britain and with the continued extensions that they get. But there does seem to be like a negative risk premium built into the currency. It is a buy against most majors, and perhaps even the US dollar. But again, you're taking the risk, or you're assuming the risk, and we all know what those risks are, not to mention COVID and the trajectory thereof. But it could be a very black and white binary issue for the UK, and so you're kind of playing with matches, but you're getting a slight discount for it given the cross rate differentials currently.
Larry, one last question. We'll let you get on your way. We heard this week from Biden administration, basically, that old familiar face is going to be back in part of the cabinet, Treasury Secretary, or I don't want to get ahead of myself, but soon it sounds like we'll be saying Treasury Secretary Janet Yellen. What does that mean for financial markets?
Well, we know what it means, because we saw what happened when that news actually solidified. She's going to come and rescue the economy. The Fed's going to be allowed to run hot. I mean, it's just like, sunshine and rainbows, as it were. But I think, it was a relief to the market, because we know Janet Yellen's biography. We know her track record. And there were so many worrisome names being put out there to the market that you put somebody like Janet Yellen up to bat, people are like, relieved. And so that's why we see the stocks have rallied as much as they have. And we've had the Treasury yields contained within that volatile but narrow trading range. And I think if that continues to happen, it's going to give solace to a lot of traders, and we'll continue to see markets run hot.